Hey guys, Britt here. Welcome to End Times Bible Prophecy. Make sure to hit the subscribe, like, and share buttons. And get ready. It's coming. What am I talking about? Well, I see more and more signposts, more news stories, more data points telling us that a great global financial crisis and a global depression is on its way this year in 2023. So I want to focus on this article right here. It's just the latest of those data points. It's from Daily Reckoning. It's written by Jim Rickards, who I would consider an expert on monetary policy, banking, and global affairs in general. He's written several books. His analysis has been spot on in years past. And here he writes this article. It says, on the cusp of a global liquidity crisis. He says, is there a financial calamity worse than a severe recession in early 2023? Unfortunately, the answer is yes, and it's coming quickly. The greater calamity is a global liquidity crisis. Before considering the dynamics of a global liquidity crisis, it's critical to distinguish between a liquidity crisis and a recession. A recession is part of the business cycle. It's characterized by higher unemployment, declining GDP growth, inventory liquidation, business failures, reduced discretionary spending by consumers, reduced business investment, higher savings rates for those still employed, larger loan losses, and declining asset prices in stocks and real estate. The length and depth of a recession can vary widely, and although recessions have certain common characteristics, they also have diverse causes. Sometimes the Federal Reserve blunders in monetary policy and holds interest rates too high for too long. That seems to be happening now. Sometimes an external supply shock occurs, which causes a recessionary reaction. This happened after the Arab oil embargo of 1973, which caused a severe recession from November 1973 to March 1975. Recessions can also arise when asset bubbles pop, such as the stock market crash in 1929, or the bursting of a real estate bubble caused by the savings and loan crisis in 1990. Whatever the cause, the course of a recession is somewhat standard. Eventually, asset prices bottom. Those with cash go shopping for bargains in stocks. Inventory liquidations end and consumers resume some discretionary spending. These tentative steps eventually lead to a recovery and new expansion, often with help from fiscal policy, meaning fiscal policy is what Congress might pass in the United States, what your government spending. He says global financial crises are entirely different. They emerge suddenly and unexpectedly to most market participants, and that's the key. Not unexpected to everybody. Every time we hear these things like, for instance, 9/11, I think Condoleezza Rice said, well, who would have thought that somebody would fly two planes into towers? Well, Tom Clancy, because he wrote a novel about it. So lots of people can foresee these things, but they're often ignored. So, and hopefully that's not the case here. But anyway, he says they emerge suddenly and unexpectedly to most market participants, although there are always warning signs for those who know where to look. They usually become known to the public and regulators through the failure of a major institution, which could be a bank, hedge fund, money market fund, or commodity trader. While the initial failure makes headlines, the greater danger lies ahead in the form of contagion. Capital markets are densely connected. Banks lend to hedge funds. Hedge funds speculate in markets for stocks, bonds, currencies, and commodities, both directly and in derivative form. Money market funds buy government debt. Banks guarantee some instruments held by those funds. Big banks underwrite government debt issues, but finance those activities in repo markets, where the purchased securities are pledged for more cash to buy more securities and long chains of rehypothecated collateral. So if you can follow all that, he says, you get the point. The linkages go on. And I think what's important here is he's showing this complex chain of financial transactions that spans the globe and that can become unraveled. That whole thing can become unraveled by essentially pulling on a string. The failure of one institution leads to the failure of another, and it's almost like a domino effect that goes through the system and has that contagion impact, just like a disease, a contagion spreading in disease form. So he says the Federal Reserve has printed $6 trillion as part of its monetary base, but the total notional value of the derivatives of all banks in the world is estimated at 1 quadrillion. So what he's talking about here with derivatives is there are these, you might want to call them insurance policies. There's all sorts of, it's not the thing itself. Like, for instance, the house, you might have a mortgage, and then they pile all those mortgages together and make a mortgage-backed security. Well, that's a derivative. And then somebody might issue essentially an insurance policy against that in case of default on that. And that'll be a derivative of the mortgage-backed security. And so these things go all through, and they say, oh, well, there's no problem with this because we set it all up so it offsets each other. So if somebody doesn't pay that mortgage, well, we don't take the loss because we took out an insurance policy with this company over there. And that company over there might say, well, we're fine because we took out an insurance policy with that company over there. And it all goes around in a circle. Everybody's insuring everybody else. That's what they say. But that's impossible. Eventually somebody gets stuck with the losses in a transaction like that. But they claim that's not the case. But anyway, he's saying here, there's $1 quadrillion worth of those types of derivatives out there. He says, for those unfamiliar, 1 quadrillion equals 1,000 trillion. This means the total value of derivatives is 167 times all the cash printed by the Federal Reserve. And the Fed money supply, we'll call it currency supply because it's not real money, it's just cash they printed. The Fed currency supply is itself leveraged on a small slither of only $60 billion of capital. So the Federal Reserve's balance sheet is leveraged 100 to 1. And the derivatives market is leveraged 167 to 1 to the Fed's currency supply, which means the derivatives market is leveraged 16,700 to 1 in terms of Fed capital. Nervous yet? So what he's saying here is all it takes is a major failure. And this is what Warren Buffett has called derivatives a financial weapon of mass destruction. So this can set off a wave of defaults that spread throughout the global financial system and throughout the global economy if we have the right default in the right place. So he says, nervous yet? Experts say, so what? These numbers aren't new and have been even more stretched at certain times in the past. Simply because the financial system is highly leveraged and densely connected does not mean it's ready to collapse. That's true. Still, it does mean the system could collapse catastrophically and unexpectedly at any time. All it takes to collapse the system is a shock failure leading quickly to panic. Margin calls would be issued on the losing position and immediate payments demanded. Overnight repos are not rolled over. Overnight deposits are not renewed and repayment is required. Everyone wants his money back at once. Essentially a bank run is what we would be talking about. Assets are dumped to meet repayment obligations, which causes stock collapses in stock and bond markets, which causes even more losses and liquidations among banks and traders. Suddenly, all eyes are on the Fed for easy money and on Congress for bailouts, guarantees, and more spending. We've seen this pattern in 1994, 1998, and 2008. Note that 2 of those 3 most recent financial crises were not accompanied by a recession. There was no recession in 1994 and none in 1998. Only the 2008 global financial crisis happened to coincide with a severe recession. The point is that recessions and financial crises are both bad, but they're different and don't always come together. When they do, as in 2008, stocks can easily decline 50% or more. We may be looking at such a situation today, and this brings us to the key question. If financial markets are almost always highly leveraged, but financial crises occur once every 8 years on average, what signs can investors look for that indicate a crisis is coming and conditions are not just business as usual for the financial markets? One of the most powerful warning signs is an inverted yield curve. This signal was last seen in 2007, just ahead of the 2008 financial crisis. A normal yield curve slopes upward from left to right, reflecting higher interest rates at longer maturities. That makes sense. If I lend you money for 10 years, I want a higher interest rate than if I lent it to you for 2 years to compensate me for additional risk, such as inflation, policy changes, default, and more. When a yield curve is inverted, that means that longer maturities have lower interest rates. That happens, but it's rare. It means that market participants are expecting economic adversity in the form of a recession or liquidity risk. They want to lock in long-term yields, even if they're lower than short-term yields, because they expect yields will be even lower in the future. In a nutshell, investors see trouble ahead. Other ominous signs include sharp declines in the dollar-denominated reserve positions of U.S. Treasury securities in China, Japan, and India, and other major economies. Naive observers take this as a sign that those countries are trying to, quote, dump dollars and dislike the role of the dollar as the leading global reserve currency. In reality, the opposite's true. They're desperately short of dollars and are selling treasuries as a way to get cash to prop up their own banking systems, and I would say their own failing banking systems. These are some of the many signs pointing to a global liquidity crisis. As we've learned in the past, these liquidity crises seem to emerge overnight, but that's not true. They actually take a year or more to develop until they hit a critical stage, at which point they burst into the headlines. The 1998 Russia long-term capital management crisis started in June 1997 in Thailand. The 2008 Lehman Brothers crisis started in the spring of 2007 with reported mortgage losses by HSBC. The warning signs are always there in advance. Most observers either don't know what the signs are or are simply not looking. Well, I'm looking. This is Jim Rickards talking. And he says, and what I see is a rare convergence of a severe recession and a liquidity crisis at the same time as happened in 2008. It's coming. And all I would add here is I would say it's not going to be a severe recession. It's going to be a depression. This is what's coming is going to be unlike anything that any of us have ever witnessed before. I mean, unless you're 100 years old and remember the beginning of the Great Depression, we've never seen any sort of financial crisis like what we're going to see here. And he's talking about, the failure of a hedge fund or a bank. This time it very well may be the failure of a country. We've talked before about Japan and the problems they have with their massive debt load. Yet they're trying to hold interest rates down on that, which devalues their currency. They're printing their currency to buy up their debt. It's a Ponzi scheme. And Ponzi schemes end with bankruptcy, widespread bankruptcy. Imagine if you have default on Japanese government debt or a total meltdown, hyperinflation of their currency. What does that do to hedge funds that have been speculating in that space, banks that are operating in that space? You're looking at a major, major financial crisis in that case. Another thing we could talk about is, well, what happens if the rapture occurs? That would be a sudden, unexpected shock to the global financial system. But we could see a number of things, but there's even more signs pointing to this. So this is from Zero Hedge. From Wednesday, this article came out. It says, Baltic Index crashes most on record as recession alarm flashes. The Baltic Exchange's dry bulk sea freight index crashed on Tuesday in the worst decline on record, sinking on prospects of a global recession. And it says here, the Baltic Dry Index sees its biggest one-day decline since 1984. And this is essentially a measure of global shipping and economic health. I have this chart here. Let's blow it up and look at it much bigger. So what do we have here? We have information going back, data 37 years, so decades of data. And here we see this drop. This is indicating the health of the global economy. And it's the worst on record that we've seen. Pretty much vertical downward. Now we looked at a similar chart earlier this week in a video titled "The Next Financial Crisis May Be Weeks Away," where we showed the year-over-year change in the effective federal funds rate, meaning interest rates, in the U.S. economy. And we had decades of data going back to the 1950s, and they stayed in this tight range, very similar to this. And then at the end, over the course of the last year, we've seen that go absolutely vertical, straight up. In this case, we're seeing it go vertical, straight down. And both are pointing to the same thing, which is basically a hard stop on economic activity. And this is going to cause not just a recession or even a depression, but a financial crisis along with it. If we go back and look at this article, they go on and they quote this managing director of the International Monetary Fund who said, a third of the global economy will be in recession this year. So just a third, huh? Does she mean a third of the nations and the other 2/3, if we include maybe the smallest nations in the world, won't? I'm not sure how that's going to happen. Where is the growth going to come from this year? The United States? Well, again, we saw unprecedented rise in interest rates in the United States that's killing the housing market, the sales of new autos. The economy is being crushed right now by the rise in interest rates and by the inflation we've seen over the past year. So it's not going to be the United States. Well, what about China? Are we going to see growth in China? Well, China's had its own real estate crisis. They've had lockdowns due to COVID. So I don't think we're going to see huge growth in China. Well, what about Europe? Well, Europe is dealing with a generational energy crisis that's threatening to basically drive them back to the 19th century in terms of economic activity. So I don't see the growth coming from there. Will it be Japan? Will we just discuss the problems Japan has? Where is this growth going to come from? Maybe India? It's not going to be emerging markets. Emerging markets are dealing with high inflation in terms of food and energy because they're having to compete for these shortfalls of supplies as well, along with the wealthier countries. So it's bidding the price up. The growth isn't going to come from there. We are heading to an absolute global depression. Now, what does that mean for Bible prophecy? I believe it's very significant in terms of Bible prophecy because these are the types of conditions that give rise to strong rulers and demagogues who come and make promises to the people. I also think it's very relevant because they have been communicating for many years now that they are going to roll out central bank digital currencies. Who are they? Well, it's all the central bankers, all the financial gurus, and Bank of International Settlements, IMF, all these people who are in control of the banking system have been telling us for years that they're going to roll out central bank digital currencies, and they've been running their test pilot programs. They just need the right crisis in order to implement those central bank digital currencies, in order to get a desperate population that will eagerly sign up for this, because there is no benefit to the general public for taking on what is really the greatest surveillance tool at this point in human history. Essentially a tracking device embedded into the currency you use for your everyday daily transactions. So we're setting all of this stuff up, and what does CBDCs have to do with Bible prophecy? Well, we know the mark of the beast essentially has the same functions, and that the government will be able to have insight into every buy-sell transaction and control who can buy and who can sell. To do that, you have to have insight into every transaction. You have to control the means of those transactions. And that's what central bank digital currency does. So guys, I wish I had better news, but 2023, I firmly believe, is going to be a year of economic chaos and turmoil. And we're going to have a video on Monday that I think really highlights just how bad this could be, and end up being, again, the worst any of us have seen in our lifetimes. And then, God willing, on Tuesday, I'm going to do a video on what we can do to prepare ourselves for that, because numerous comments and emails have been coming in with asking for advice on particular situations, financial advice. How do you prepare? How do you get ready for this? We're going to look at what the Bible says, and I believe the steps that are necessary to take to be prepared for what is coming. So, God willing, that'll happen Monday and Tuesday of next week. In the meantime, what are your comments? Please, if you have some sort of data that says, oh no, the economy is going to be great in 2023, by all means, please leave that in the comments. I would love to see that. I'd love to be wrong here, because of the pain and suffering that I know would come about as a result of this. But I'm just looking at the data, I'm making observations, and sharing that with you, and what I see does not look good for the year ahead. So leave your comments below. Make sure to like and share this. And again, God willing, I'll see you on Monday. Bye. If you want to learn more about the end times and Bible prophecy, make sure to sign up for my free monthly newsletter and get your copy of my free ebook, 7 Signs of the End Times. Just follow the link in the description to get your free book. Also, make sure to check out all of my books. Just look up Britt on Amazon, Barnes & Noble, Apple iBooks, Google Books, Kobo, or anywhere books are sold. Thanks for watching today, and until next time, keep your eyes fixed on Jesus, the author and perfecter of our faith.